Yeah, I think that reflationary trade that we've seen over the last few months is just taking a bit of a pause here. Investors obviously trying to gauge that tug of war between the near-term virus and the economic impacts, and of course the lag timeline to widespread vaccination and a return to economic normality. So I think this is just creating a little bit more vulnerability in the market.
So speaking of the markets, you were kind enough to send some of your research over. You're calling for a rapid recovery. You're seeing that as the most likely scenario. And as part of that scenario, you're seeing U.S. equities with a return of 6% and emerging markets with a return of almost 17%. Can you kind of explain your thesis there and also the timeline?
Yeah, absolutely. So our view is that the outlook has brightened considerably here in 2021, obviously given the vaccine breakthroughs and the progress towards, vaccine rollout. Of course, early this year, the increased prospect of more fiscal spending out of the U.S. has created some notable upside potential for the U.S. economy as well. So all of this making way for a stronger than expected recovery in 2021. And this, in our view, this reflationary environment that I talked about should make way for the laggards of 2020 to assume performance leadership in 2021, notably the value-oriented, economically sensitive sectors and regions of the world that should benefit, given the reopening trade and are tied to the fortunes of the global economy. So in that instance, emerging markets, for example, from a sector perspective, the cyclicals, resources, commodities, financials, again, sectors that lagged last year, we expect to take performance leadership this year.
So another part of your forecast is a weaker dollar throughout 2021. Can you kind of explain why you see a weaker dollar and how does that impact that cyclical trade that you're talking about?
Yeah, absolutely. We expect the soft dollar conditions we saw through the back half of 2020 to extend into 2021. And that's largely, again, hinging on that stronger global growth outlook and a revitalization in risk appetite that will inherently weigh on the U.S. dollar due to its counter-cyclical nature. In contrast, a weaker dollar bodes well for higher commodity prices, and that has emboldened our preference for energy, materials, in general, just commodity stocks.
So I just want to make sure I understand. You're a bit bearish on the dollar, but you're bullish on the recovery. But we just showed the dollar chart. This year, as the dollar's fallen, it's really been mega tech stocks and consumer discretionary stocks led by Amazon that have seen that surge. What changes in 2021 that gives you the cyclicals like industrials and materials the edge?
Yeah, absolutely. So 2020 was the year of the pandemic, the work from home trade, the technology stocks obviously led the performance charge and underscored the defensive nature of the rally through 2020. Obviously, lots of risks, given that the virus continues to circulate globally. Now, our expectation for that rotation in 2021 is largely endorsed by the expectation that global growth will improve and become more durable. And this will allow for that rotation to become increasingly durable, given that reopening and recovery trade that we expect to take hold in 2021.
All right, Candace, we're almost run out of time. I want to ask you one more question. Futures are mixed again. Only the tech-heavy NASDAQ up right now. What do you expect for the rest of the day until we get that Fed policy announcement? Do you see the markets continuing to be mixed throughout the day?
Yeah, consistent with what I mentioned earlier, just, trading on the headlines, a little bit of mixed market moves here in the next several hours, though we're expecting a fairly accommodative message from the Federal Reserve here today. And I think this should ultimately help to support risk assets. We expect the chair to reaffirm that policy will remain accommodative and likely push back on some of that notion that will be a taper in the asset purchase program this year. So this should, in general, be supportive of global stock markets broadly.
Shepard Smith here. Thanks for watching CNBC on YouTube.